Oh man. Well, we're just kind of watching the show here this morning. Everybody just bought some NASDAQ on this last little breakdown here, and we're going to see if it holds.
Beautiful. I see the, I've been a little bit out of touch, but I see the European bank stock that ESBZ is really breaking out nicely. So.
Yeah, here I was looking at the other one. I couldn't remember.
Yeah.
This is the same thing, I think. This Euro stocks.
Yeah.
I mean, that's a big time trade.
Yeah, man, it's fooled us many times, but we'll see. What else is going on? I'm going to mute myself. I'll just listen. So.
No, I mean, we've just been looking at the stock rotation. I think you got to go back to the industrials. It's CAT, Deere, 3M's holding up.
Yep.
Chips haven't broken anywhere really. A lot of these China names look good.
Good. Yeah.
So Matt and I are just kind of in the zone of trade the levels when they give them to you and forget about the rest of it.
Yeah.
Trade what you see.
Trade what you see, I think, is a operative phrase for the moment. Too many things. It's like you watch. If you watched gold this morning, when the news out of England, well, no, it's not. First of all, you get so many headlines back and forth that it's on, it's off, it's on, it's off. Everybody's in the game now. I think every policymaker in the world, from China through Europe, I think they're all just involved in this game. You know, headline grabbers, I call them. I'm not insinuating that they're trading because I don't know that, but they sure love to grab the headlines. Everybody's a headline grabber.
It's just crazy. I mean, Langer had a really nice number down there in the gold this morning, and it went right there and stopped.
Yeah. Well, now it's struggling because now the news is positive again. It was interesting. I've been watching it CAD Swiss for so long now, and it gives you a break. Especially because the Canadian going back. Let me digress a little bit to the unemployment numbers last week were so good in Canada, and that got that rocketed, of course. But we got the election, I think Sunday in Canada, Monday. I don't think nobody's really firmed up yet, and whether Trudeau can form a government, even if he doesn't quite get as much votes as he had before, will be interesting. At least it'll take, and the Canada has held up fairly well for a change with oil, hanging around at $53. I'm talking about West Texas. So that's interesting to watch. Going through other commodities, as I ran charts this morning, the beans, that chart looks awesome, but again, tied to whatever statements are coming out from somewhere. Whether it's China, whether it's a vote in the House, which is meaningless anyway, but the Chinese don't like it. They don't like the optics of it. Big deal. We're just, so that's why you trade what you see, because we're caught between headlines, and until the markets really get some satisfaction. Now, that being said, God, I hate that phrase, but you watch the yield curves here. I see the 2.5 broke out yesterday above the 200-day, which is 200 days at negative 3.5. So we closed yesterday at negative 2.5, but it corrected back a little today. So that's worth keeping your eye on. The 210 is meeting its 200-day at about 15.5. Yesterday they closed at 14.5. This morning they were trading yesterday closed at actually 15.3. So they're respecting the 200 days, which is interesting. But again, so much of that is news driven, because the bonds this morning looked pretty good, and then of course better news came out, and you saw both the 2, 5, and 10 get hit pretty hard when there was a sense that the deal was done and that the the Northern Irish DUP was willing to, I guess, acquiesce to what Boris Johnson had wanted. So that gave us some, some sense. Oh, better. That didn't last long. Then of course they turned around on the retail sales data, which was weak. And then we'll get sometime spending digesting it. Interesting that some people thought that it was weak because we had pulled sales ahead in August, ahead of some anticipated tariff rises. I think there's a lot of truth to that in economics. We've seen that in Japan over and over and over again. But that's one of the, I think, better rules. I won't call them laws in economics, where what's known as Ricardian equivalence, which is if I know that there's a tax hike coming, I start saving ahead of time because I know I'm going to have an obligation. And that obligation is forces me to do things that will not favor the economy going forward. It's very well known, even what Keynes called as paradox of thrift. So these are pretty solid economic rules that do not always, but a high probability of proving themselves. So now we'll wait to see the next retail sales number to see whether the consumer is just reacting to the political headlines or is concerned about other things. So that's where we sit. And again, I think the concept of trading, what you see is the absolute way to proceed here. So I applaud everybody who has the patience of that.
I just had one thing that was kind of ruminating in my mind, was that this whole European bank stocks rally started with everybody beating up Draghi in the press.
Yeah.
And now, what's the expectation there? That they think that Lagarde is going to get off of that whole?
It's interesting because now I'm caught up on my reading. It's interesting because then there was a piece yesterday by John Plender, which absolutely defended the dinosaurs, so to speak, while Trichet came out, I know, a couple of days ago and wrote a piece in support of Draghi. And of course, the FT will support Draghi. But I think the criticisms are right. As everybody who's ever listened to me or read what I've written for years already, that Draghi is, this has been a big problem. And, you can spin it, and it's all spin. It's all spin. There is nothing hard and fast here. It's all spin for those who support him because you've evidently done well, because you've been an asset. So, he saved the EU. Oh, yes, that's right. And that's what the first one did. After that was just grandstanding and building that balance sheet. But again, what's Lagarde going to do? She doesn't have to do anything as far as monetary policy for a while. She's going to be just, she's going to pick up the baton of Draghi pushing for massive fiscal stimulus programs in Europe. That's for certain, which is why, my inclination is to believe that Europe will outperform the U.S. because you are going to see something. I'm not sure what, but they're in a much better position, meaning Germany, the Netherlands, Austria, I'm not going to say France. France is difficult to comprehend, but you're starting to see some realignment of the bond values. They are moving, and that's, of course, if you get a euro bond, things are really going to change dramatically. But, that's an anticipatory event. You'll start to see it in the markets because you will get convergence of yields, at least tighter than we've seen them. Where the 10-year French-German went out to 40 basis points. I think the low convergence was about 15 basis points between the French and the Germans. So that's the range it's been stuck in, basically 15, I would say, to 45. Differential I'm talking about on the 10-year. It's starting to, creep in now. If you were to really get a Eurobond, though, that convergence would exceed dramatically. Where it would go, I don't know, maybe 10 basis points until it really gets sorted out, or 15 basis points again for another visit, because that's what that's about. The convergence of yields. At some points it really does get. I mean, the market is certainly anticipating it. Otherwise, why would the Greek, now I'll say this again, the Greek 10-year, 1.40. The U.S. 10-year, 1.74. So if you don't think that this is based on some type of comfort level of investors seeing convergence, you'd be sorely mistaken. Spanish 10-years are at 22 basis points. Portugal, 17 basis points. Ireland, 0, basically. Of course, France is negative. So this is all predicated on, first of all, the bank, buying up supply, of course, but investors believing that something will come of a Eurobond. And you know what? And why nobody discusses this instead of, just attacking this one, attacking that one. It's there. The proof is there. The proof is there that this is the logical outcome. And I think it's when you saw, especially the Germans getting very upset, they're starting to see it now. And because that train is in motion, I don't know that there's anything they can do to stop it. That's right now the feeling. But, and this is what I caution, this is what it's going to make the market so vulnerable and volatile. Not today, not tomorrow, not before the end of the year, but in the coming 24 months, we will see a phenomenal amount of volatility as everybody wakes up to what this is. Now, if you get German acquiescence, then there won't be that. But and this is what John Plender's wonderful article in the FT yesterday, that means that Europe will have to settle into a transfer union, meaning that Germany, the Netherlands, anybody who's who runs current account surpluses will be transferring money to those who don't, to cover the costs and to make sure that those economies are not going more into debt. And that will, by definition, mean a Eurobond. So it'll be all done together. Well, if it all takes place, then you know what? Being long European equities and short the U.S. will be a great play. Again, this is the way the market is pointing to, but when I can't tell you. I can't tell you. Nobody knows. Nobody can tell you. Nobody can tell you. It's all based on this, that, and the other happening. It's certainly in motion, and believe me, that's why Lagarde is there to see it through its fruition. Because I don't know any other way here. If somebody can point me to another way, I mean, you have a lot of international listeners. Tell me what you think the other way is. Tell me what you think, is the higher probability if it's not that. And I think, we will be attuned to it, but that doesn't mean that's why you trade what you see. Now, can trades run here for 3 months, 6 months? Yeah, absolutely. But again, the bigger picture is certainly that, and how the ECB deals with its massive balance sheet.
Well, thanks, Ira. I mean, that's good insight.
It seems like, Ira, I got to make sure I'm unmuted. Yes. Yeah. It seems like there's, like in the last week, I've seen a lot more public criticism of Draghi from other European central bankers. And so I wonder if that is in some way meant to put some pressure on Lagarde as she comes in and takes the reins. And it seems to be the Draghi's opponents that are the most vocal at this point.
Oh yeah, they've certainly found their voice in the last 3 weeks.
Yeah, in the last 3, exactly, and that's what I seem to notice too. Either that, or I'm just reading, a lot more, which could be the case too. But it does seem to me that they're out there and trying to pressure Lagarde into, and that's, I've got to think that that's what it is knowing that they're headed towards a euro bond, and that's going to, so here's my question: does the euro bond put more pressure on the savers in the especially Germany and the savers within the EU, or does it take the pressure off?
Give me the timeline. The immediate sense, in the immediate sense, I think it would take some of the pressure off because it would allow rates to actually reach some kind of median, and we could sit here and do the calculations based on the capital key and the percentages involved, and say, oh, the Eurobond right now would have a positive yield if you combined them all. It might have a positive yield of maybe 35 basis points. Well, that becomes certainly more interesting for investors. So, again, it all depends how it's done. So, again, nobody can answer that question. I think right now people are theoretically doing it, which is why you see the convergence taking place, because I think that there are synthetic baskets being built by pension funds, insurance companies, because they're trying to mimic that. And they're going, well, at least I'm getting some yield. I think foreign investors, whether it's the public pension fund in Japan, people who are searching for yield. So they'll play that game, and you can synthetically really do that by just following the capital key. So I don't think it's a silly question. I think it's a very good question. But what will the outcome? I think the initial thing will be to relieve some of the pressure on savers, which is maybe one of the ways that they'll get the Germans to acquiesce. But again, it's the question that needs to be dealt with. Because if it's a transfer union and it's a harmonization of fiscal policy across the Eurozone, things become easier. If it's done in some different way, because the Germans are going, we're not going to be on the hook, for the guarantee of all this debt, so we have to figure out something out here. So that's the festering dilemma. It's a festering dilemma, because how does this get done? And that's why I continually ask the question: is the present German guarantee, the implied guarantee of the ECB, an act of fiscal stimulus?
Yes, I guess. Yeah.
It's not a theory. It has huge practical implications. I'm not asking that question because I'm looking to write a doctoral dissertation. That has phenomenal implications, because then if the Germans were to say, listen, we've already had huge fiscal stimulus because we're on the hook for everybody's debt, don't keep pointing the finger at us to spend, X amount of money on a fiscal stimulus package. It's a real issue. It's not a theoretical issue.
But there are just so many interesting things that are going on in the entire geopolitical world, and between military and economic, in all of and just everywhere politically, the world is changing so quickly.
Well, it just went on in Turkey after that call. I mean, that's just the most amazing thing in the world. I'm going to sanction you. Yeah, go sanction yourself. See you later.
Yeah.
you know.
Oh, that's a good.
No.
Yeah, that's right. That's what, and I guess that's what I was going to kind of try to head into was exactly that, which is exactly Turkey, and not the political implications or the military implications, but how that affects how well, yeah,
It's a massive win for Russia.
yes,
Huge.
huge.
And it took him about 10 minutes to figure that out.
Yeah, and then he goes, "Oh, I'm going to devastate them with sanctions." Yeah, well, we don't care about your sanctions. Yeah, you can sanction all 2 or 3 of my oligarchs. I'll throw them up in front of you for sacrificial lambs, but I still win.
It's really unbelievable. I mean, we've talked about this. This is not new. You know, the fact that he pulled the plug like that was, to me, unconscionable, and that's not a political statement. I read enough about Kurdish history and studied this stuff for so long that, you know, I had great contempt for George Bush the First from 1991, what he did to him. Of course, he was only following an age-old policy of the U.S. and others, and then Clinton, and then George Bush the Second. They all treated the Kurds very poorly in an effort to court favor with Turkey. And this is, you know, people are, you know, it's amazing how the market walks through this, you know, again, and I'm not, it's just, they're totally unattentive to it. And yet, you know what, the issue that here becomes, and I have not read one thing about it, we're not one mainstream media, Article 5 of NATO. What do you do now? What do you do? What if Russia and Turkey wind up at war? Do you come to Turkey's aid against Russia? Because that's what Article 5 says. An attack upon one is an attack upon all.
And then you've got the Turks have bought the missile defense shield from Russia. Yet
Right.
they're still the second largest standing army in NATO.
Well, you know, that all the Orthodox Jews seem to think that Trump's the greatest gift to Israel ever was. Well, he's just totally made their situation in the Mideast basically untenable.
Yeah, I was waiting. You know, it's a good point, Judd. And you don't have to point at the Orthodox. Just people who go, well, you know, but he has put Israel in a very bad situation. And the Israelis have been awfully quiet here. And you know, they've been the ones training and working with the Turks for 40 years.
And they hate him.
Not the Turks. I'm sorry, with the Kurds.
Oh, the Kurds, yeah.
Yeah, they've been instrumental in arming them, as Iran was. If you go back to the 70s, the Shah was the one who was arming in the early 70s. Was arming the Kurds and supporting the Kurds and protecting them.
That's
but now
interesting.
you've now opened another window for the Russians, and they walked in there very quickly.
Oh, yeah, they're not waiting around. I mean, Trump's only read one history book. It was the history of the Roman Empire during Caligula's reign.
Yeah.
That's it.
And Navarro's book on China, I don't know, and I doubt he read that, but he had a nice review of it. Somebody read it. No, this is, the world is far more dangerous because of this, and yet, you know what? We're still concerned about Chinese tariffs. You know what? Yeah, yes. Chinese. But you know, it's again, you know, it's one of those things. But the more you discuss it, the more you talk about it, and the more it affects the market on a daily, and it is a daily basis, back and forth, back and forth, back and forth. And even the Chinese have entered the fray with sending out tweets now. So now I figured that, you know, that's what. They said, hey, we can play this game too. This is pretty good. This is pretty good. You know, it's almost like how to succeed in business without even trying. Just, you know, Robert Morris, deny. You know, if you're caught with another woman and your wife sees you, just deny it. You deny it. So everybody's just busy. We acquiesce, we deny. We acquiesce, we deny. It really, and this is, you know, and we live, again, as we've discussed numerous times, we live in the algo headline readers, and these headlines, it's amazing how they're all crafted to get the most volatility out of the algo readers. So, yeah, and yet the world, the instability of the world grows and grows and grows. Markets care not, though. Maybe that's a good thing.
Okay, so all right, why is that? Why would that be a good thing?
Because maybe they've matured enough to go, you know what? We'll know that we have a sense that they'll be resolved, and rather than just, we've always had wars, we've always had conflict. We've always had these, so maybe we should give them less weighting than we have in the past. Maybe, but I'm not one. On certain areas, I say yes, but on other areas, there is growing uncertainty in the world, which, from a movement of global capital perspective, no. Sorry, I'm not thinking that the world is a safer place, and that's on top of all the economic uncertainty. You have the political uncertainty following upon economic uncertainty. We've had the economic uncertainty. The political uncertainty is just growing. Let's go back to the fact that the Saudi oil installations were struck by something. What was that? 3 weeks ago?
Yeah.
That's nothing. We've had ships hit in the Red Sea, the Gulf of Oman. There's no lasting implication. Nothing. So,
that's where Putin wins, because every time he gets a spike, he can hedge.
Well, you know what? He is certainly there. He is certainly there, and nothing lasts. And we go right back to the Chinese tariffs. So that's the economic uncertainty. The political uncertainty is just building and bubbling below that, and it is. There's a lot of uncertainty. If the fact that Pence and Pompeo are going to Turkey, well, what are you going there for? Why'd you do this anyway? I mean, that's my question.
Yeah, it was stupid, and now you're trying to unwind it, and you can't.
Yeah, you've let, and you know what? Those people have already been displaced. They're already building that. Going after them and da da da. It's it's like with the biofuels, because now the small farmers or the farmers who were supposed to get some benefit from the smaller refiners, the EPA just undid that. So now they're upset. Does nobody talk to? See, that's the problem with all these tweets. There's no centralization of policy, or so it appears. Again, as soon as you do this, then you're talking about applying sanctions. Well, if that was going to be the action, and you were going to have that reaction, why would you embark upon that? What do you think the Turks were going to do? You had to know that. The Turks are always moving troops, and when they move the troops into the up against the border in this Syrian northeast, what do you think they were going to do?
Well, they've been saying it for years.
Yeah. There was nothing new there. So what? You called their bluffs. So now what are you going to do? What are you going to do?
There's nothing they can do.
I'm so.
It. Other than calling in airstrikes and taking all the land back right now, and starting another front on the war in the Mideast, that's where they're now left. They had 200 guys that all they wanted to do was go out and be badasses that were there, controlling how many? 10,000 ISIS fighters.
You know what? And you read from the American service people, especially a lot of special forces people who've served over there, and they talk so glowingly about the Kurds and working with them, and they're heartbroken. I mean, who's talking to who here? Who's? That's really the most bothersome thing, is who's communicating with who. And it's boiling underneath. Now, what happens when it comes to a boil? Well, and I laugh. People say, well, the United Nations. Wait a minute. The Chinese and Russians have blocking at the Security Council because they have veto power. So tell me what exactly you're going to do. You're not going to get anything done there. Can't. Because you already now have the Russians openly, taking the other side. And they like the role that they've been handed. This is every bit as bad as Obama handing the Russians a role in Syria. Maybe worse. Maybe worse. So again, trade what you see, because whatever you think it's going to reverse and show you something else in a minute later anyway, because it's all predicated upon headlines, and then of course we have Brexit, and now those will create all kinds of different headlines. But so you got to look to the markets. It's like I look at Euro Sterling. Let that be my guide, because that'll tell me what's really going. Because who's ever in the know seems to be moving in the currency markets, and you see where the Euro Sterling's at, actually still hanging in there pretty well. So we had one bounce today, and then we're right back down to the bottom. So I would say that the real money feels that there will be some deal done there. And it's interesting. The FTSE doesn't trade on a good outcome, by the way. The FTSE's trading absolutely in line with the sterling. Because when the sterling was a lot weaker, the FTSE was higher.
There are just so many things ruminating around or running through my mind. Not ruminating, but running through my mind right now in the bigger picture. Just trying to wrap my mind around the fact that, or the idea, not the fact, but the idea that the markets may be mature enough now to be able to handle the global instability. Thinking about, and then going back and thinking about not just what's happening between the Turks and the Kurds and the Chinese and the tariffs, and the tariffs that not tariffs, but the sanctions that we have on every country now almost in the world, and how nobody really gives a shit any more than they care about a couple of missiles lobbed into a ship.
Well, I'm gonna hold on. I'm gonna do this.
Hey guys, keep your eye on this Russell at 31.5, which is its 200 day. See if that starts leading. So far we haven't gotten low enough in the S&Ps to do any damage, but that doesn't mean that at some point it won't.
Now, all right. So we have not paid for a trade on either end. We have not gotten 4 points or 10 points to pay for any of our trades yet on the upside or the downside of the NASDAQ or the S&P. So what that's telling me is to just chill out and relax and enjoy the conversation with Ira. I took a couple of shots. Every trade I've made, except for when I got long against the low of 88 when 15 held in the NASDAQ, that's the only trade that I did not scratch. And I stopped out of that for, at 89.5 or something, or 89.25 somewhere.
Yeah, it's not going to be an easy trade in here. It's, and it's going to take all afternoon to settle up. And again, we're back at these levels in the NASDAQ bonds and the S&P bonds. It's going to take some time to get through here. Mm-hmm. And the mid cap, actually the mid cap acts the best of everything. So then it becomes a name game again, and the game has been in a lot of these biotechs today. Those are the ones that had the biggest up. I mean, right now, if you want to buy a name, it's AMD.
Anybody in my room also is don't, and especially the new traders, don't start messing around with the pay lines. It's 4 points, period. Don't start in a quiet market like this, especially the new traders. Don't start making it 2 or 3 points just so you lock in profit. All that's going to do is teach you or give you bad habits and starting to scalp in the middle of a range, and that's not something that we do. Stay disciplined.
You're going to get days like this, and right now you're getting a day like this. So okay, we've had a lot of good days over the last 2 months. You know, and this day might turn out to be a big day, but in the meantime, it hasn't shown itself yet. So just stop clicking the mouse and wait.
Absolutely. And take your scratches, because everything we've gotten so far has been a scratch. We've had the ability to scratch almost everything, at least in the equities. I think now we've got pretty much the rooms combined. As soon as I heard Ira, we just got the link out.
Yeah, I was.
Shit, what'd I do with you?
Let me. I'm going to pause this for a second until he comes back in. Okay.
All right, good. I'm glad.
No, don't be glad. I don't know.
I paused the recording, so if everybody wanted to shower me with 4-letter epithets, they could.
You know,
go ahead.
Judge, you put out that work on the chart, the 200-day up at on the S&P bond.
Yeah.
Yeah, you know, it catches a lot. I don't know whether, you know, what it'll do with it, but it is interesting. Here we are in mid-October. And it's, you know, now we have the S&P DAX well under the 200-day, which really was support for almost 4 months.
We were talking about that. Judd and I were talking about that the other day.
Mm-hmm.
I forgot to bring that up. And that was a trade that I missed, and I was aggravated about it. But I thought that we'd have a lot more volatility in the first couple of weeks of October, like we have the 2 previous years. We had a week of first week of October was good, and I don't mean good down. I just mean good either way. It doesn't matter.
Trading wise, trading wise.
And so I guess that brings me back to my thought, Ira, is that, or your thought, you know, which I've got running around in my mind, is that maybe the markets are mature enough now, or at least for the time being, to be able to absorb everything that's going on. And it seems like, so then in my mind, it seems like the big money or the big guns are sitting here waiting or preparing for a big rally in everything.
Yeah, you know what? It's, you know, I was watching Leon Cooperman this morning.
I saw that. Very good.
Huh? Yeah, it was really
great
good.
interview.
Yeah, it was. It was. You know what? They don't listen. The interviewers.
No, I was yelling at them. I was yelling, "Shut up! Let him talk." That's funny.
Yeah, well, especially Kernan, because he's useless.
Oh, the guy. Other guy.
Sorkin was terrible too, because you know he's trying to score points, you know, so he can go to the next cocktail party and be the standard bearer for what, I don't know, but it feels that it's his role. It's like he doesn't listen to a word he has to say.
Yeah, well, these transports are really going again. It's JB Hunt led yesterday and FedEx. And, you know, it's stock on rotation. The ones that are beaten up the most are the ones that get bought.
Well, I think the transportation stocks are sensing that at least the tariff issue will be quieted a little bit. I think that's very important for them. And because, you know what, if you watch the transportation, the CAS transportation index that Peter Bookvar really covers so well, and you say, and a lot of that has just been in response to the tariffs. You know, it has slowed transportation. A lot of stuff, you know, heading to the ports and reverse. So I think that's what you're sensing, is that, you know, well, maybe this is at least not going to escalate. That's the right word. There won't be an escalation, and I think they were anticipating the worst. So that's to me a wait and see one. Let's see. That's how I'm dealing with that. Let's see. All
right, so let's just get back to one thing here, which was the SPU bonds.
Yes.
And this goes back to what I was totally out to lunch on Friday. I was looking at the wrong chart. and I had a daily up. This is a daily continuation. Watch what happens if I put a daily up. There's no 200-day moving average there, okay?
Yeah.
Because that's just 6 months worth of data.
Yeah.
So for all these new guys that are in here, if you're not looking at the right chart, you're not going to be looking at the right data set. You're going to come to the wrong conclusion. And this cost us some really big trades from the short side late Friday because I didn't see the average until I looked at it really late in the day and saw that I was looking at the wrong chart. So all you guys that are in the room, you know, when we're talking, don't think we know everything that there is, and we appreciate your input, and it helps us if we're not seeing something or if you have a catch that we don't see.
Yeah, you know, as I always tell people when I lecture, when I speak somewhere, kick the tires. If you're not kicking the tires, you're not helping anybody. You know, because again, you only have so many eyes and ears, and the more you push, and the more. Again, you know, I've sat in. See what this really is. What I'm sitting in with everybody who's in on this phone conversation right now is at the better global macro funds. This is what they do on a daily basis. They sit and they will discuss for an hour amongst themselves, so that they can ferret out the best ideas. I can tell you that that's how they operate. And if somebody really comes up with a good idea and somebody executes it, but the person who propagated the idea doesn't act on it, that goes to his P&L, a small percentage for the propagation of the idea. Now, that's not how this room works, but it's the way that you really ferret out ideas. And you may have an idea and put it out there, and everybody beats the hell out of it. And by beating the hell out of it, it doesn't stand, and it prevented you from doing a stupid trade. That's worth more than a good trade as far as I'm concerned. Because you know, it would have been a lot of wasted mental energy chasing a bad trade. Or you have a trade and then all of a sudden the trade gets better conceptually because they've beat it up, and yet it stands. So that's how a lot of really strong trades are developed. So that's what this is about. If it's not, don't stand there and just be what's the word I want? Don't have it pushed down your throats. That's not going to help you, and it's not going to help anybody else who's in on this conversation. Just not.
Yeah, we'd rather have you an active member than a passive member.
Yeah, it says it even better, because that's the way. So, you know, hey, no, I think your view is absolutely preposterous. Fine. Again, here's the major rule of thumb I learned the second day I was ever on the trading floor in May of 1977. Somebody grabbed me and said, "Hey, if you come here with a big ego and a lot of money, you'll soon leave with a big ego." It's not about your ego. It's not about your ego. It's not about you feeling good, feeling bad. It's about finding things that work to make profitable investment and trading decisions. That's what it's about. Everything else is, you know what, commentary. That's all. So please, you know, I love to push back. That's why I always say submit the questions, and I'll get to them. You know, and I'll pick up the phone if I think and I'll do some work before I even get there, unless I know about it. You know, unless I've done the work on it prior to it. You know, it's critical. It's critical. Otherwise, we're just spinning our wheels and, oh yeah, I had it's like a paper trader. Oh, I made a lot of money, paper trading. Doesn't mean anything to me.
And well, everybody wants to ask the question once we're in, you know, and nobody wants to think about it beforehand, which is, you know, it just can't get, people just don't seem to want to do it.
Yeah, well.
And it becomes, and it leads to a better discussion if they think about it beforehand.
Yeah, it does. If they, but I understand. But even the response is really just as valuable. because they may have thought about it. But you know what? It takes a lot to put it out there. It takes a lot because you've got a group of professionals who are going to beat at it. But trust me, I've sat in these, and in every trading room I've ever been in who's successful, they have these morning sessions. And when they stop doing them, it's amazing how their productivity falls off.
Uh-huh.
It's amazing. But everybody gets busy, and I would go, no, you can't be too busy because this is where it happens. You can't be too busy. But you know, what does John Lennon say? Life is something happens when life gets in the way. I don't know. I forget the line, but it's a very good line. You know that, but it's true. You know, and if you take your eye away from it, then you stop doing what you're doing. Because I know that there's been, from just my limited time being here, there's a lot of good thoughts that are generated.
It's been great for all of us, Ira. I mean, we've gotten so many great trades off of these conversations in the last few months. It's been unbelievable. We caught all the big swings. You know?
Yeah, which is good, you know, and again, coupled with it comes the concept of patience, you know, and you learn that. You go, okay, yeah, you know, I do, you know, I'm listening to these guys and they're all pretty good, so they're being patient. I can be patient.
Yeah, well, here, Jeff just put in, he said fantastic. I mean, he just told me he had the biggest October he's ever had.
Yeah,
September, October have been giant.
And again, you know what? These conferences, and I know you're on Zoom, between Zoom and Slack, and when the video becomes better as we really get into 5G, and you're able to do these all televised, where everybody just plugs in and everybody's getting, and it's able to carry the speed and width. We'll be able to do it. These will become even more because they're global in nature. You know, I know you got who's it? Mike from Germany. Who's from Germany? You know, these are important. Yeah, these are important voices. These are what, you know what, because look, I used to depend on the media. The media just, you know, I read it because I have to, but there's very little, you know, again, what am I doing reading it? I'm ferreting out concepts. And I'm seeing what, you know, things are based, I know, and then I'll go and look, you know, it's like the people who, you know, were so afraid of Brexit. But wait a minute, I'm watching Brexit. And you know what? As I always said, the weakening pound was a safety valve and really protected Britain, and it has. It has. Where it goes from here, I don't know, because we've seen the correction already, and it's not an insignificant correction right now. You know, we've dropped from what? Let me put up the Euro Sterling chart.
It's still going. Well, it's steady right now.
Yeah, but it's okay. But you think about it here. In August, we were at 93.27 as the high. August. So we're talking 2 months. And now we're at 86.28. This has been, you know, an 8% move, 9% move. Not insignificant. And so, and it's interesting. Then you do the overlay of the FTSE, and you see how much impact a currency does have. So when, you know, let's give Trump his due here when he points about the dollar and the way that other central banks manipulate their currency by saying that it's, you know, interest rates are set only on domestic bonds. That's nonsense. It's nonsense because they're all aware of the impact of the currency. And believe me, the weakness in the sterling has really softened the impact of the conceptual impact of Brexit. You see it. Go ahead, overlay the FTSE.
Yeah, I've got them up there so everybody can see them right now. I've got Euro Pound Weekly and I got the FTSE Weekly up right underneath it.
Yeah, I don't have them up. So I mean, I looked at the Euro Sterling, but I don't have the FTSE up. But you see what the FTSE did right after, you know, June 24th, 2016, when the vote took place. You know, the FTSE held in pretty well relative to all the doom and gloom, you know, and the doomsayers. So, and that told me that, well, you know, this isn't quite as, you know, binary as people think. There's a lot more to this, and you have money pouring into Britain, by the way, who bought the sterling and with it bought British assets because things were on sale. Not only was real estate being downgraded and people getting nervous, but with a weakening pound, that made it even that much cheaper. It's like buying Brazilian soybeans when the real is when the dollar real is weak. For a foreign buyer who's got dollars, it becomes a significant savings. Currency valuations do matter.
Yeah, and the one interesting thing I'll say about this, and Matt and I were talking about this thing that Crinelli's coming up in November with you're out of town with 100 traders, and I always kind of come back to
wait. You're talking about Crinelli. I talked to Anthony November 14th, I think, right?
Yeah, the
13th or 14th. Yeah.
I might be there. I talked to Anthony last night.
Oh, good.
Okay.
Because I'm doing a shoot on the 31st with him at the new studio.
I'll be there. I'll be there that day too. I'm going to do another shoot with him too at the new one.
And he's got a special guest too. I know.
Well, okay, so let's go back to this euro pound a second. And this is what one of the things of trading IQ I kind of come back to. What's the standard deviation in the S&Ps? What's a standard deviation move in the currencies? And what's a big standard deviation move in the bonds? And 99% of the people can't answer that.
Yeah. Yeah. Well, and every market has its own idiosyncrasies, by the way. Markets are markets, but there are certain markets with idiosyncrasies that you have to adapt to. You have to adapt to because, that's what makes the currency market so difficult. So when people say, oh, yeah, Alan Greenspan famously said, he said, I don't know anything. He says it's a coin flip. Believe me, it's not a coin flip. When the markets are locked into a tight range, and the range is tight, but I love this because we're coming out of here one way or another.
Yeah,
now,
and you're going to get an 8 to 10 figure move in the currencies. You just had it in euro pound. That's a big standard deviation move.
I'm telling you, if you went to a euro bond, my first bet is that if the global market accepted the concept of it, is that you'd get a fairly sizable rally in the euro. We maybe go to press that 124, 125 area again, which we've been up there. You know what? If you go back 7, 8 years, the range hasn't been that small. We've just been locked in here now, and a lot of that is, I think, based on Trump and.
Well, you said that right here in 2017 in September. You were looking for 124 or 125 in the euro. When I first heard it, I'm going, where did he pull that out of? And then I had to go back and start doing some work.
Yeah, we went there, and then it failed because United, with Yellen, and we got out. Everybody was buying into the end of QE, and which is why as I said, I'm not I've maintained this. I'm not bullish the dollar at this juncture. I'm not aggressively trading anything, but I'm just not bullish the dollar because I think with what the Fed just did. And I'm going to be watching this very carefully. You have to watch the 210s here carefully because there is some fear, and that bond reporter at Bloomberg has written about it for months already. That if this were to take place and they were to start buying T-bills as the amount of T-bills coming to market started increasing, their problem is there may be a shortage of bills because money market funds and others who need it for repo and other types of collateral for borrowing will not be giving up that because there's just not enough differential to move you down the curve. So the Fed won't be able to buy enough, and this is a potential issue that we're facing. It's not here yet, but I think the 210, if it starts to steepen, will tell you that the Fed may have to move down the curve a little bit. This is just my supposition. I know nothing. I'm just thinking about it because this is what I would do. is I go, okay, if I can't buy enough T-bills, which T-bills are only issued out to 1 year. After that, they become a note. So the 2-year note ought to be put in play. But we'll see. It's early, but I think the 210, because there'd be demand for the twos, that might, have that impact. Something I'm watching very closely.
Well, wasn't there an article this morning? I don't know where I saw it early about a lot of these hedge funds not wanting to sell their T-bills to the Fed.
I saw that. Yeah, I saw that.
That was the FT had an article.
Mutual funds.
Yeah, but Alex has been writing about this for that this was a possibility. So it does. What the hell was that?
Here, Brett asking 10-2s are pushing against resistance, Ira. What are you looking for them to do? What's the impact on equities?
Yeah, we will see this. It'll probably, again, I believe when curves steepen, that its initial impact is just like flattening curves are bearish for equities. I think steepening curves are viewed as a good thing because so much of our borrowing is geared to short-term levels. That it's initially all my work has said that it's initially a positive because then it seemed that the Fed is actually getting it right where the flatteners, although again it's why you have to be adaptable because what we've seen with all this QE and all this central bank intervention is what have been long identified important elements to the debt markets have been absolutely destroyed by central bank action. They've destroyed the market, and I've been saying this for 6 years. A lot of people have been that there is no signaling mechanism, and capitalism needs signaling mechanism. The market needs signals so it knows how to react, and they're broken. They're broken. So what we used to be able to say with 90% certainty, we can't even say with 50% certainty. We just don't know.
All right.
That was my point. That was my point on, I guess that was the point that I had with all of this, with everything just being out there uncertain, and what your point was, Ira, about maybe the market's just being mature again, and I can't help but keep going back to it because there's just so many things uncertain out there, yet we're hanging in there. It's
back to Kansas City Southern that started showing signs of bottoming before anything else. Now they bought the transports on the dip. Some of the biotechs. It's a big rotation. It's an opportunistic rotation.
Yeah, you know what? That's right. And you saw I had gotten out of KSU really great, but it's almost, it's a little bit higher than when I got out because I got out really well when I was thinking that the markets were in for a correction. And the peso was, the amazing thing is that KSU and the peso is really decoupled from how closely tied they were. Here,
I was sitting right on the 200-day. So what do you want to do with it? I mean, how do you get
it's it's had a lot of negative news with AMLO not being quite as market friendly as some deemed possible, and the way he's handling Pemex, but yet here it's back here again. And throughout the whole time, KSU was still performing very well. But on the other hand, there's a lot of money flowing into Mexico because of the linkages, and it was always meant to be a critical player in the supply chains, and now it's back. So. Because of Chinese pressure, and when you really look, I mean, really, if you really did a 20-year study, you'd go, wow, Mexico, relative to the rest of the world's developing markets, the peso is really cheap. And it's cheap even when you factor in, we'll do Schiller inflation or wages. It's still very cheap. China's much more expensive than Mexico was when this all started happening in 1994 with the advent of NAFTA. Much cheaper. But you know, it's interesting that they hold Mexico to a really high standard with its politics, because the political corruption and everything that comes with it has just been such an albatross for them. Here, now we got a headline, you know, Trump says U.S.-China trade deal is being papered.
Yeah, with what?
Yeah, I don't know what that even means, but the market reacted.
Is he in the bathroom? Is he in the bathroom?
You got market reaction. I'm not answering that question. I'm an American.
Oh boy.
But you know, but all these things are certainly in play. You know, and you know, there's mornings I shake my head. I go, no, and it's, you know, and that's why I trade them, because everything we discuss in this room, you can get way ahead of yourself. But when you see conceptually and you're prepared and go, okay, you know, it's like, I was fascinated this morning. I thought the gold was really going to take off, because it was rallying into the face of pretty good. It even held its rally when the news came out on Brexit. And then, of course, it, you know, we fell back to basically where it was during the night. But I go, because that's what you want to see. You want to see these things, again, I can't stress it enough, when they decouple. So you get a good Brexit outcome. And if the gold doesn't break, okay, you know, what else is going on? But the gold, as I've maintained and will maintain, it's a monetary phenomenon. And the uncertainty that's going to be growing out of the ECB and whatever else is going on in Europe is, I think, you know, will keep gold to the, you know, we'll keep the upside bid to gold, because that's what it's really all about. Because there, you know, again, there's a lot of central banks out there who've made a major bet, and they don't have an exit strategy.
Yeah, and here, I want to just show you guys something on these point and figures. Here's 100 by 3 in the gold, okay? And now it's picked up this double bottom of basically 1480. I know that Langer had a number at like 1479 this morning and changed that it held. So you can see that double bottom. It's just like this double top on the S&Ps, you know, just above 30,000. It's an area where it's always a directional trap the first time into it. And then you have to see whether it can take it out and extend or not. But until it takes it out, you don't want to be pushing against that string at those zones.
Yeah, it's a very good, and you know what? And again, it's protecting your money, because we know that certain things will take place. We will. Right? The fundamentals will always win out. But I don't believe in tattoos, but paste it on your head. Markets can remain irrational far longer than you and I can remain solvent. John Maynard Keynes. That's all. Never lose sense of that. You must, and because then it forces you to step back and reevaluate, going, and that's okay. That's trading opportunity. I'm all about trading opportunities.
Yeah, and basically the bottom line is let the market tell you that it's real.
Yeah, that's right. That's right. Oh, look at KSU's up to 135. Wow.
Well, and look at all the great trades we've had off of all this other stuff just by waiting. All the gold trades we've had, looking at waiting for the currency metals to give us a long trigger.
Right. That's right.
How many trades? 5, 6 for $40, $50 at a clip overnight?
Yeah, and to prove the point that gold is always a monetary phenomenon, just go back when you see the real breakout that took place at 1370 on June 19th, June 20th, the day when the Fed truly pivoted and we knew exactly where we were going, and the gold finally takes out that key resistance level, and we've been able to sustain above there. In fact, the move was actually quite powerful. and it took the silver with it, and then the silver actually led the way. But that's a monetary phenomenon. Nothing else was really happening at that time. But now the caution is with the sense of reaching an agreement with the Chinese and getting Brexit, is that it takes the pressure off the central banks. Okay, that's right. And so if the metal's going to give me a correction off of that, great. I'm going to use that and let the market, because it wants to react that way. That's why this morning I was very interested in watching it. But if it's going to go back down to 14.20 in the gold, 14.25, 14.30, it's still, monetary policy hasn't changed. Yes, we might not be getting more, but it doesn't change that central banks are still caught in a trap of their own making.
Yeah, so we'll just keep look. This is part of your homework rotation. It's part of mine. Is always to come back and look at the spreads to see if they're setting up to do anything. Right.
That's exactly right. And they'll tell you. They'll tell you. And the relative value trades tell you as well as anything. What's going on? Because it tells you where people are truly looking. Well, where are you looking? Well, is there opportunity there? It was the whole thing with the European banks, which, DAX, and the DAX will suffer or potentially suffer because of the automobile tariffs, possibly, from Trump. And he's actually been very quiet with the Europeans, because Europeans will threaten back, as they plan to, maybe tax U.S., large cap tech stock. There's ways to play with this. So, but that was the one that really showed us. That's the one that really showed us. And you see the fact that the ones, now they need they really European rates in the 2s and 10s really need to, I have to think in negative terms. So you look at them going back to zero, it would be a huge plus for the banking industry, which would take some of it with it.
Yeah, and you can see that the high was on the ECB meeting, and we haven't been anywhere close. And that was that's when we got out of the last longs on the gold and the silver.
Yeah.
And that great trade we had with you, and when you were trying to avoid the branch Davidians in West Texas driving around in the car.
Right.
And we took
that's like a month ago already.
Yeah. Oh, yeah. But that was a great trade. That was on the 11th when we had the ORH day and gold and euros. And, that's when we bought all that gold going into that meeting.
Yeah. Yep.
And gold was up $40 in the morning.
Yep. I remember that.
Yeah.
Yeah, I was sitting in that hotel in, not El Paso, get your minds out of the gutter, Amarillo. I was with Amarillo Slim. I went and ate the Homer Simpson 72-ounce steak.
That's funny.
No, that's right. That's a month ago. Wow. No wonder I'm aging.
Oh, that was just an unbelievable trade. That whole thing going in for that last ECB intervention in the bond markets. That was the
ECB meeting. Right.
Yeah, it was the high in the Italians. It was a high in the blondes. It was a high in everything.
Yeah.
The high in the 30-year.
Yeah, so the long-held correlations still have value. And if you do your work and prepare for it, that was just preparation. That was preparation. See, and those are the meetings. Those are the meetings that matter, those prep meetings. And even if there's nothing going on, to take an hour out every day and do that bears great value, and I've seen it.
Yeah, and how many trades we get, even the oil, off the oil you want. I mean, it's been giving us great signals. You just have to wait for them. You don't have to sit there and click the mouse all day long.
Right. These guys who I do a lot of advice for, I just got there September, and they lost a negligible amount of money, but the way that they're managing money. And I told them, I said, that's phenomenal because I think September was a very difficult month. If you were managing money in September, it's a very difficult month because there was so much, to and fro. And if you're not, when you trade a fund, you can't trade like that, So to be able to sustain, that means that they did a good job of keeping their powder dry. Because I was truly expecting them to take a hit, and it was negligible. And I said, and I sent them a note. I said, as an investor, I'm telling you, you guys traded great. So, patience, and it's so antithetical to anybody who's ever been in the pits. Because I've had to retrain. I'm still retraining myself every day, because I could see it, and there's some days I'm not patient, and then when the opportunity comes, I'm totally out of sync.
That's one of the things that we've been talking a lot about in my room. I've got a bunch of pit traders in my pit traders in my room, and then also some order fillers, and also interestingly enough, a bunch of engineers. So I think that's an interesting thing that there's a bunch of engineers in my room. But pit traders, we have. I don't think that most screen-based traders would have been able to make it on the trading floor. I think it was, just as most pit traders can't make it on the screens, because we absolutely have to retrain our minds and retrain the way that we trade and think and act. I'm having an ongoing discussion now with some people on Twitter about how I had to restructure my life, Ira, when I left the trading floor. I had to eat right, I had to run, I had to exercise, I had to do the same things every day, and I had to build these little habits so that they became second nature to me, which allowed me to be able to fall back into a pattern of behavior that was constructive to enable me to trust myself so that I can trade the market effectively without fear, or not without fear. There'll always be a bit of fear, but fearless and emotionless.
Yeah, it's a very good point. And Judd will tell you, when I used to work with guys, not in any official capacity, but when guys want to know, hey, what do you think? And we'd meet, and we would discuss before the markets would open ahead of some type of data release. And if they were prepared, they did well. But if they weren't, Judd will tell you that then they were run over. They had no idea. But if you knew what to look for, if what's the market expecting, what's consensus looking for, then when the market hits, if it's a little bit better, but then you get the recoil action and it holds, okay, there's something bigger here. That's what you always want to know. I know what this is going to do. Is there something bigger here?
That's absolutely right. Today's a great example. Just the price action in the S&P earlier, and the Nasdaq got under some important areas and were trying to push lower. They couldn't. They came back through on the upside of the opening range, so got long, and now it's a pretty obvious market that they're going to try to push back up to yesterday's high.
97 are the daily intraday buy stops. On the half day, they're going to go up and try to get those. Because when you remove yourself from the pit, it's more than the gut feel that you could do in a pit by just seeing flow.
Yes.
You're not seeing that. The electronics is not seeing the same type of flow that you would see in a pit. And that's, for a lot of floor traders, that was their edge.
Well, absolutely, and they're trying to recreate that with using market profile on the screens and other things. You can't do it. You can't do it.
It's the wrong thing to use.
Well, and then there's a lot of people, who are gaming that, because again,
that's a problem.
You may think you're a great programmer and smart, but there's 10 guys, it's like there's 10 guys sitting there trying to figure out what you've constructed, deconstructing it, and working it against you. That's why.
Make a tick.
Yeah.
Oh, that's a very good. That's a great. That's very true. Stoudemire, somebody just asked me this a little bit ago about just on Twitter. I just answered it half an hour ago about if I use market profile. I said no, I don't. Pete Stoudemire doesn't think it's effective. Why would I want to trade it? And you just said it, because they deconstructed it. And are using it to or could have, I don't know. What do I know?
Yeah.
I'm a trader.
Well,
I know when to buy them and sell them.
Larry Williams said the same thing in his interview
Yes, he did.
with Anthony. And it was a great comment. I don't use volume. I only care about price.
You know what? I sat and talked to him for 2 hours after that, because we were there together, and I had never had met him. I certainly know Larry Williams. It was very interesting. And he invited me to come down. I said, it's not my neck of the woods, but if I find you, we shall meet. But that's very important. But again, you got to be willing to do the work. So many people fail because they won't do the work.
That's right. And that's another thing. Just a colloquial example of that is when Judd and I met in 98. The first thing he told me was to start buying the don't read the sports section of the Sun Times or the Tribune, buy the Financial Times, and we'll meet every morning at 6:00, and you better be able to answer the questions based upon the articles you read. You don't have to answer them correctly. I don't expect you to understand them, but you better be able to have at least a rudimentary understanding of it. And that's how I started to learn. And then talking to you through the years and talking to other traders that are more experienced and knowledgeable than me, and then learning how to go off and do my own research and my own reading and follow, down rabbit holes that,
That's right. But more importantly is to avoid them. By being prepared, avoiding the calamity, because I'm prepared.
That's right.
I'm prepared. And then if I'm wrong, that's when the technicals really help me, because I can define where my risk is.
Anthony asked me in what my favorite pit story was, and that in my first podcast with him. I don't think he was expecting the answer I gave him. I told him it was the day that Greenspan cut interest rates by 50 basis points on the first trading day of the year, I believe in 2001, and I was short 18 big Nasdaq. He was a little bit taken aback, but that was my favorite pit story, because the next day is when I realized I better really learn about what's truly going on and why that decision was made on the day that it was made, so that I avoid this. In the future. It was
like the Tuesday or Wednesday, wasn't it? The first Tuesday or Wednesday
of the year?
Yeah,
it was a Wednesday.
And what did I tell you that day? Whatever you do down in this area, buy them before you sell them. That was the only thing I said in the morning meeting.
Yeah.
Whatever you do, the NASDAQ gets into this area, you buy before you sell.
Well, I happened to be late that day, so I missed the morning meeting. But Jason told me when I came in, and my only thought was, you know what? We're trading at 19. We were trading at like 20 even in the NASDAQ. I'll get them down to 1970, 68, touch off some stops, and I'll push them by. I can get them down there by myself. Nobody's here. Sold, sell you 5, sell you 2, one at 8, one at even, one at 9, that kind of shit. And then boom, all hell breaks loose. But before that, Jason, who was on the other end with you, said, "Hey, my uncle said don't be short down here." Oh, now you tell me. Thanks, Jay. I'm just going to get out and go to lunch. Bam! We rallied 600 points.
he bought 20 lots from Emo and $700,000 before he could put them on his card.
I know. 700,000 before we can even write them out.
Who did that?
Jason.
That fat rat bastard ended up emo. God rest him. He was a good man. But that fat fucking Armenian, he turned around and averaged them. He sold 100 at 26.5. That's where I covered my shorts.
Yeah, you know what? But again, that's why you spend. If you're not going to spend the time in preparation,
that's right.
It's you're barking up the. You know what? Then it's a hobby. And you know what? This is an expensive hobby.
Yes, it is. I mean, really, Ira, the point of me telling you that story, or reminding you of that story, I know you already know it, is that's when I realized that I've got to really be prepared correctly all the time, and not just rely on Judd being prepared, but I need to be prepared.
Yeah, that's right. Because you know what? Again, you have to push back and go, you know what? I think you're wrong about that.
Mm-hmm.
Yeah, and it's okay to be wrong. You just have to know where you're wrong.
That's why I used to tell my kids all the time. I'm wrong 100 times a day. Trust me.
Yeah, and look at this low in the transports today. You couldn't get a better low on a retest, right at the 200-day moving average in the opening range. So that tells you, guys, you just got a Wednesday low, and don't be short. You got to see where this thing goes. Even the oil's giving you a little help right now.
Yeah, see, now we're getting a rally in the stock market. We're getting a rally in the equities. And now the gold has not, I'm just watching things.
Yeah.
So where I would expect that to have gotten hit. No, Canada's come back after, they went down to 4. I didn't even see them go down that low. After that, and the data, that's how funny it is. The data wasn't that bad.
That's what Judd and I were talking about, is that this morning there was a mixed board. There was some risk off or risk on, some neutral, a lot of neutral,
Yeah.
Well, that's what got me, that whole European thing. The DAX strength is why I have no desire to be short the indices, the U.S. indices, because I think they got to come back for them, and they have to lead.
Well, yeah, I think a lot of people were positioned short, thinking about last October.
Oh, yeah.
That's right.
Right out of the beginning of the fourth quarter, it was a steady drumbeat of lower, 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 lower. So, I think people were banking on it. It hasn't happened yet. Oh, you know what? And let me leave you with this, because as the last geopolitical factor, now we have had something in the last few years. First of all, we had the Saudi king go to Moscow, and then we saw energy prices rally, by the way. Oh, I know. That was when I did that, my first Credelli, that was with Santelli, Credelli, and I, we're going back that far, where the Saudi king went to Moscow, and then energy prices turned around. I said, you have to be attentive to that. Now, Putin comes to Saudi Arabia this week. He was in Saudi Arabia, in Riyadh.
Oh, right before the IPO.
I don't know that we're ever going to see that IPO, by the way, but that's just my
I agree.
Analysis of it. But here again, Putin is in Riyadh. These are not small things, These are not things, just like the Saudi king going to Moscow. It's very substantial. Now, how it plays out, I don't know, but it tells me whatever I thought I knew has just changed dramatically. Pay attention, idiot.
Yeah, well, there's two big topics here that come to mind. Carving up the Mideast for power, and the Saudis want to be left alone to some extent, and they need to stabilize the price of oil, because they both need the revenue.
Yeah, there's no question. Believe me, and Art Cashin and I'm not name dropping, it's just the fact I had written in the blog after that it was, when I'm going back to 2013 and 14, and Art Cashin is nice enough to at times, pick up the blog and put it in his letter. But I had made the line that, hey, the Saudis were renting the Russian army, which is true. It's exactly what happened in Syria, because the Russian army and Air Force did a lot of things that made life easier for some. So they can do it by basically agreeing to lift the oil prices. Hey, that those two can agree on. How can we get oil prices higher? The only thing is that it helps the Iranians, but that's not always a bad thing either. So,
isn't Putin aligned himself or allowed Iran to kind of align with him?
For the moment, that's one. Those two have historically had all kinds of problems. That was the classic case where the enemy of my enemy is my friend. which is a classic situation in the Mideast. You always, the enemy, Israel plays the same game. The enemy of my enemy is my friend.
Yeah, and Russia had a big day yesterday. A bottoming action followed through today.
Yeah,
and
you know
it's
what?
breaking out above the oscillators right now too.
Yeah, that's one I've been sitting in all year waiting for. That RSX. I buy it on breaks at least. I don't reach for it. But it's to me. That's the one, but that's one of my indicators, which is really why I'm involved in it, because I'm watching for because that if you got something again, and what does Putin want? Putin wants those sanctions gone. Officially. He wants them gone, which will be interesting to see if he leverages up his position here.
What do you mean? What do you, leverage up his position?
With Turkey.
Oh,
yep.
Yeah, okay.
Yeah, because again, he's right in the heart of it now. You know what? A lot of stuff going on, and don't forget what Erdogan threatens Europe with is pushing another, 2 million refugees into Europe.
Yeah, this time they'll all be all ISIS fighters.
Yeah, well, you know what? It doesn't even have to. That's going to come back and haunt. I believe so. There's no question to me about that.
Guess what? If I lived in a building with the name Trump on it, I'd be selling and getting the hell out.
I don't know about that, but okay.
Oh yeah. You want to have a target on your head? Live in a Trump building.
So, but whatever plays out there, he's now got more leverage than he had before, because Europe is scared of a massive. You see how politically it's impacted Europe. They couldn't take another massive run. So you know what? Everything is placed to his hand. Everything. I had to think about this. I said, maybe I'm missing something there. Maybe Trump is actually out ahead of this. And I said, nah, it's not that I'm calling him stupid, but I don't think he's thought this through. And it tells me by the response of people in Congress that, for the life of me, I don't get this. I don't know who he's playing to. It's just, it empowers Putin here so much. So it gives him the leverage. If he threatens, hey, we're going to blow this, you're going to have more refugees, and Turkey's releasing these, wow, watch what happens. You know what? Get rid of what's the price I have to pay? Well, the sanctions. Oh, yeah, I can get rid of those.
Yeah.
Because, that's a good point. So, and that'll be the end of it. If he does that, he's in bed with him. He's in bed with him.
Yeah, right.
But you made that point, and I can't forget it, because I think it's so very interesting. A few months back about the concessions that Putin has made, and the give and take between the two of them. That Trump was looking like he was getting ready to ease some of the sanctions.
Yeah. And
now with this half-assed impeachment stuff going on with the House, look how that'll turn fast.
Yeah, I'm not sure where that goes, by the way. And you know what? Somebody made a big point that, Trump signed off on one of his tweets the other day, impeach the president. And I think that there's cooler minds amongst the Democrats going, they don't want this. They do not want to go to, because if you vote to impeach, it's going to the Senate. And there it becomes a grand inquisition, and everybody is capable of being called.
Yep.
I'm not. I think the Democrats have woken up to saying, "Do we want this?" Because what it is, it's going to be. Trump is actually. You have to give him this. He is actually orchestrating that it would be the absolute media frenzy. So everything that got there, every question, it would be red meat for the media, and this is where he excels. And I'm not sure you want to, because you're not going to win it anyway, right? Can we agree? Because I don't think that
there's no
right.
way.
So all you're going to do is give him a platform to get on the attack. And we know if there's one thing he does well, it's that.
And that's how he got elected the last time. So they're providing a platform for the same, clickbait stuff. It's the same reason I don't watch Chuck Todd or any of those other people anymore on Sunday morning, because it's all gotcha TV.
Yeah, and he will work this. They don't want this. It's a lot of lip service, but they do not want this.
No, and that's why I called it kind of a half-assed impeachment. I don't think they want it, and it's behind closed doors. They're not even letting in members of the Republican Judiciary Committee into the hearings. It's all behind closed doors in the Senate or in the House Intelligence. So the whole thing is half-assed, and oh boy, now what do we do? How can we slow walk it? So we appease the extreme left. It's the extreme left and the extreme right of both parties that are.
Well, at some point, you actually have to abide by the law, which he doesn't, because he's a dictator. So, that's a problem in itself.
You know what? America was built to prevent people like that. So, he gets the attention, but at the end of the day, nothing really gets done. It's just noise. Because you have to give the Founding Fathers the understanding of how to just keep setting up roadblocks to prevent that. And I think you see it play out, and it frustrates the hell out of him, and then it gets worse. But it's really the way the Republic was built, and you know what? It's why I'm not opposed to the Electoral College. You know what? There are things that are meant here to be stumbling blocks on the road to imposition of absolute power. And to me, what makes America as great as it is you have those impositions. Because you've had people like this. Nobody is obnoxious in their use of it, but we have had people. Well, I can't come up with a better word.
You're right.
That's true. And he's the best it's ever been at manipulating the frenzy.
Yeah, because he learned from his work in television. And don't forget, he was the darling of all these people who now piss on him. They all wanted him on their talk shows. Go look. It's a library.
Yeah, because it gave him ratings, because he would always say something outrageous. Now it's the problem is he's doing things that are outrageous.
Yeah, because then it was just fun. You get him on The View, get him on this show, get him on that show, and he learned. He does know how it all works. He doesn't need anybody whispering in his ear how he knows how it works. Because he said, "Hey, I made a lot of money with this. I did The Apprentice. Can you imagine they paid me all that money for that?" He's laughing because he does understand what it feeds on. And God, he spends every day chumming the waters.
Yeah, he's always testing out a new word, a new line, and seeing what resonates. And if it resonates, then he keeps on pushing it. Hillary's a crook. Put her behind bars.
Right.
And
he just
paid for his base. They love it.
Yeah. So that's why if you're going to vote impeachment, once you unleash that, wow. That's all I can say is wow.
It's going to be a circus, and it'll be a good trading environment.
Okay, it'll be crazy. It'll be absolutely insane. All right. You just, and again, so much of it is preparation. That's why I keep the questions coming, because it really gets us on target rather than rambling all over the place. So heed my advice.
All right. Thanks, Ira.
Hey, Ira, okay. Are you headed to the? Are you going to the get together at TT for the FIA conference on the 29th
of October?
October, yeah.
No, not that I know, but I could. I'm around.
All right. I just got
all right, so keep me posted.
Let's see if I
can do that.
All right.
Okay. All right.
All right, we'll see you. Thank you.
All right.
Wow. Stop tweeting before, stop recording before I start swearing.